Is there a way to take advantage of good debt for financial independence? The short answer is yes, but it depends which type of debt you're going after. Debt is good when it's tax deductible and when it is used with a calculated risk to yield net positive returns. That is bad when it's the wrong kind of debt, the kind that is not deductible against your income, nor does it help generate positive cash flow. Wealthy people have debt and they like it that way. They use their after-tax cash for fancy gears and holidays. However, they borrow to invest and deduct the interest on those investment loans. That's called good debt, and it's how the rich become richer. While getting a mortgage can be a positive thing because you're buying and investing a house that over time can appreciate and grow in value, besides providing you a shelter to stay in, the mortgage can become an even better debt if you employ the Smith Manoeuvre technique. If you have house mortgage debt, you can use the Smith Manoeuvre technique in Canada to convert it to a tax-deductible debt. The Smith Manoeuvre uses the common tools of Canadian financial institutions as well as Canada Revenue CRA, and it's 100% legal. It has been reviewed by the CRA and endorsed by economists, financial planners, and financial institutions. It is a legal and common practice to deduct interest when you borrow to invest to produce income. That's a technique that my wife and I have started to use recently. In fact, back in December of 2021, we refinanced our mortgage from MCAP and opted to go for a re-advanceable mortgage with Scotiabank. We went for the Scotia Total Equity Plan and got a re-advanceable mortgage on our house. This allowed us to tap into the existing equity in our home to borrow it and then invest it. That is the money that we borrowed and opened a new portfolio account with Questrade. It's a non-registered account for our Smith Manoeuvre dedicated for that. And we invested close to $80,000 so far into that account. In a few moments, I'll share with you that portfolio, where that is at, and our plans for the future. But in the meantime, if you have any questions, be sure to ask those questions in the comment section down below. You're also encouraged to visit the website www.smithman.net or read the book Master Your Mortgage for Financial Freedom to learn more. We also have a video series here on this channel dedicated for Smith Manoeuvre portfolio. So be sure to check it out if that's something that you haven't done already. With that out of the way, let's get into this video and provide a walkthrough of existing Smith Manoeuvre portfolio with Questrade. Let's get into it. All right, as you see here on the screen, we are sharing with you the accounts that we have with Questrade. It's our individual margin account. We are not tapping into the margin, but rather investing, putting money into it based on our home equity and taking advantage of that to borrow and buy into the stock market. For that, we have selected only one ETF. It is Vanguard All Equity ETF, ticker symbol VEQT. It's a all-in-one ETF that allows us to get exposure to a diversified approach to the stock market, giving us exposure to the stocks in Canada, in the US, in Europe, Asia, Oceania, as well as the emerging markets. And we've made a video here on this channel talking about that in depth that you can check out if you would like to know more. Currently, we have 2,210 shares of VEQT in our portfolio. The value of our account overall is down by close to $4,500 at this time, but that's not something that we are worrying about because we know that overall the stock market has done poorly in the beginning of the year, and that's also a reflection of how this portfolio has done because we are exposed to the overall stock market over the span of longer time horizon. We know that's going to be changing, and we are here for the long term for this portfolio. We are adding to our existing shares of VEQT over time as time goes by. We still have around $500 or so in terms of cash available that we are going to be using even in the week ahead to gradually buy more shares of VEQT. But let's take a look at how VEQT has done over the different time horizon. In the past 1 year, VEQT, based on its ETF price, is up by 6.15%. In the past 6 months, it is showing to be down by about 6.17%, very close to its 1 year return. It's actually gone down negatively. In other words, this could be a wonderful opportunity for those who are investing for this ETF with a longer term horizon. The past 3 months, down by about 6.5%. Past 1 month, it's down by close to 4%. The past week, it was showing a negative return of about 1%. And the past 1 day, in the last trading day, almost stagnant in that sense. One thing that I wanted to bring to your attention is the breakdowns of the holdings for us. In this case, our 2,210 shares are bought at an average price of $36.41. We're gradually bringing this average price down as time goes by, as we start and continue to buy shares of EQT at lower prices. Our market value for these investments are at $75,957. As I indicated, we have some cash available. That's why the total value comes higher to closer to that $76,000 that we talked about earlier, and we showed it here on the screen as well. That's the cash that we have available in our account. The good news is, as we buy shares of EQT at these lower prices for our accounts, we managed to bring our cost average down. Currently, we are showing an overall open profit and loss of negative 5.60%, or down about $4,500 in value, or an unrealized loss. But we are not worried about that. We are going to continue to buy at these lowered prices. In fact, as I talked about, in this portfolio, we currently have about $570 worth of cash that we would like to continue to use in the week ahead to add to our existing holdings of VEQT and bring our portfolio size to larger. Over time, as we continue to pay down our mortgage, that's how we tap into it and reborrow that amount, the principal amount that we've contributed, to buy more shares of EQT. We are also going to accelerate this whole process by gradually paying down our mortgage faster and then borrowing that money almost right away to buy more shares of EQT. But stay tuned for that. That's something that we haven't quite done yet as aggressively, but we expect it to be well on its way in a matter of a couple of weeks, or potentially in over the next months or so. Stay tuned for that, and we'll watch out for our weekly updates on this portfolio. Well, there you have it, folks. I hope you found this video beneficial and you gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And don't forget to subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, real estate, cryptocurrencies, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.